Good morning, everybody. 5/29. Happy Memorial Day. The month of May is over. We had a small correction as we called for in the month of May. We're going to be looking that June would correct. We're going to be looking that this is the Dow Jones Composite monthly chart. These are the names in the Dow Jones Composite. And when we look through here, there, Cisco's in here. You got lots of diversification. Nonetheless, the leadership stocks that made these markets overbought will be the ones that correct, and those will be the ones that we end up buying off the bottoms and the good leadership. What I will go through with you, new MMTs and our worldwide network people that will be looking for these today when they log on, is that this top right here last month, I said we were overbought at 95.8%. It's on the stockmarketfunding.com homepage. Go back then and take a look at April 1. We said that overbought was there. We also said that 5/1 at 93.39%, we were still overbought. Not quite as bad. But these monthly percent DS readings, once again, are standard technical analysis that people make decisions on. So guess what? Bull rallies. I didn't say bull market. I said bull rallies. Let's take a look at 2010 only. We came down here. We consolidated last year when we had a pullback, and then we hit it up. And we've had bull rallies all the way up here to this May reversal that we called. June is traditionally not a good month. However, irrational exuberance has no rationale to it. This is where people get stuck at tops at certain time in the markets, like up here. And bam, $3.6 trillion gone. The full 4-year expansion model with stimuluses back up at the 2000 a decade ago, where these things came down, is that the Dow led it to all-time highs, and it gave it all right back up, came right back where it started. Why? Because bull markets, bull expansions are very, very exuberant in nature, and it gets all of the people, all of the big money, all of the mutual fund managers, institutional investors, gets them all in up there, and then bam, they take it away. Now, this particular expansion from the financial crisis is 2 years in nature. Whereas this expansion, just like the 96 expansion to the 2000 top, was a 4-year expansion, but they all failed miserably. QE2 is part of this move last year when we were breaking out and we started having a pretty good correction here. We started consolidating down here. Bernanke comes in. And remember, they also did this in 1930s after the 1929 crash. Same behavior repeats itself. Humanity, human behavior, human bull exuberance, all of it repeats itself. I do not see that the upside here is very limited and the downside is extreme. There's nothing but look at all of that downside. Your upside up here to these other resistance levels is very limited. So in the month of June, we're going to look for a weekly level, a gap below in these things, that bull rallies. I didn't say bull market. I said bull rallies. Bull rallies, bear rallies that you make money on selling short. Bull rallies, bull rallies, bull rallies, got to pull back. Bull rallies get extremely overbought down here at 93.39%. That's the final reading. June correction, a June pullback correction from a bull rally is totally in the cards and totally needs to have happen so that when you do pull back, that same bull that was putting money to work and running it to the all-time highs come back in on those pullbacks. So you can take some off of the table. You can get some short off on. Then when they do pull back, you want to get on that bull train again, because that bull train will come right back in as we correct in the month of June on the Dow Jones Composite. We're overbought. Look at, if you had a really good economy and you had really good things going on around the world and you had a really good employment rate, hey, I would say you could justify that overbought area. But we don't have any of that. And the reality is we do not. And not only that, the oil, energy, food prices, all-time highs. Even though that they got the gasoline to drop for the Memorial Day kickoff summer season, that's only going to last for a while. Next year, we'll be up around $140 a barrel in oil. You could stay overbought between now and the end of the year with bull pullbacks, bull rallies, bull pullbacks, bull rallies before a final collapse. Sometimes they could be 6 months out. However, it's time to take profit off the table. When we do pull back, we know the leadership stocks that drove that index to all-time highs. Earnings season is coming in July. If we remain overbought going into the July quarter, we will be shorting everything across the board, because anything that good could have happened or any earnings is already priced to that forward-looking quarter in July. Tuesday, we're starting off June. So basically, bull rallies, bull rally leaders is what we buy. Caterpillar's one. We've been buying it. There are other ones that we buy in here, but we only buy leadership. IBM is one that we have bought and will buy on pullbacks, because the great leaders in this Dow Jones Composite, what led it higher to this overbought level, when it pulls back, it's going to be those same leadership stocks that bounce. Overbought, June correction coming.